The Smarter Money Life podcast is sponsored by Forum Credit Union, a member-owned financial cooperative serving members since 1941. Forum, your trusted financial partner, helping members live their financial dreams every day. Hello, everyone, and welcome back to the Smarter Money Life podcast. I'm Andy Mattingly.
And I'm Nicole Royal. Today we're diving into a topic that impacts all of us. Spring cleaning your financial life, because the spring isn't just for decluttering closets. It's also the perfect time to update, streamline, and refresh your financial systems.
Although I probably do need to declutter some of my closets, but we won't talk about that today. We're going to walk through some practical moves you can make across cash flow, your debt, investing, taxes, insurance, and more. And the best part, most of what we're talking about can be done while you're sipping your coffee or sitting on your deck, enjoying the hopefully spring weather we're going to get.
That sounds almost enjoyable. Let's start with cash flow, because this is really the foundation of everything else. Before you tackle debt or investing, you need to know exactly what's coming in and what's going out, and where your money is actually going.
And a great place to start is reviewing the last 60 to 90 days of spending. And this isn't about judging it, it's just observe it. Look for patterns, seasonal changes, and categories that maybe need to be adjusted to reflect the real life instead of your best intentions.
This is also a perfect time to cut wasted spending. Cancel subscriptions you're no longer using, renegotiate cable, phone, or internet bills, and question recurring charges that no longer add value. Small changes here can free up meaningful cash each month.
You know, I've been told if you try to cancel your subscriptions, they may give you a good offer and get it back. So maybe even ones you don't want to get rid of, you want to try.
There could be a benefit there.
Automation is another big win. Set credit cards to auto-pay the full balance. Automate savings transfers and add reminders for irregular expenses like insurance or property taxes. These systems reduce stress and help you prevent having late fees or surprises. So just put everything on automatic and let it go.
And finally, build flexibility into your plan. Cash flow isn't about perfection, it's about awareness. When you control your cash flow, you give yourself options everywhere else in your financial life.
Now, once your cash flow is under control, it's time to look at debt. Start by listing your balances, what your rates are, and the minimum payments so you kind of get that big picture.
And then you choose a repayment strategy. Two common approaches are the avalanche method and the snowball method.
Now, the avalanche method, you make minimum payments on all debts, but put extra money towards the balance with the highest interest rate first. This saves you the most interest over time. But, progress can feel slower at the beginning because it takes you a while to get it paid off. But once you get the first one paid off, then you go on to the next one.
The snowball method focuses on smallest balances first, regardless of interest rate. Paying off debts quickly can create momentum and motivation, especially if debt feels overwhelming. The most important thing is this: the best method is the one you'll stick with. Some people even start with a snowball win for motivation, then switch to avalanche for efficiency.
And if you're trying to reduce interest rate costs, consider refinancing. And people think you can only refinance your house, but you can refinance almost any debt. Consolidating, or even a 0% balance transfer, as long as it fits your situation. And remember, you can refinance more than just your mortgage. As I said earlier, look at car loans, because car loan rates are coming down, so that could be a good place to look at refinancing.
Any and all loans should be considered. Student loans deserve attention too. Make sure your repayment plan and any forgiveness options you may qualify for are current.
Yeah, and I think people forget about student loans because they've been in them for so long.
Yep.
Now, once you have a plan for paying down debt, something important happens. You start freeing up cash flow and also mental space.
And that's when the conversation naturally shifts from cleaning up the past to building for the future. Let's talk about investing. Spring is a great time to do a quick portfolio check-in, especially if markets have moved and your allocation has drifted from where you intended to be. This is called rebalancing.
And a good rule of thumb for rebalancing is if you're more than 5% off your target allocation, then you need to rebalance. And it isn't about predicting the market. It's about managing your risk and making sure your investments still align with your goals and time horizons. And if you haven't done this in a while, you might be surprised how much your portfolio doesn't match your intended investment strategy.
This is also a great moment to look at your retirement contributions. Even a small increase, just 1 or 2%, can have meaningful impact over time, and you should always make sure you're capturing your full employer match. That's essentially free money that you don't want to miss out on. Any match, if at all possible.
Simplification matters too. If you've got 401ks or scattered accounts, consider consolidating where it makes sense. Fewer accounts means lower fees, easier tracking, and better decision making. Plus, you'll have a better sense of your overall savings and ensure your assets are invested using your current investment strategy.
And finally, focus on what you can control: diversification, cost, and consistency. Investing doesn't have to be complicated. A simple, disciplined approach done well over time often beats complexity and guesswork.
Investing is the fun part. But now we have to talk about taxes because that's part of the reality. A little planning here, though, can save you some frustration later. And this isn't just about filing last year's return. It's about using what you've learned to make better decisions going forward.
If last year's tax bill or refund surprised you, that's a signal. Take a few minutes now to revisit your withholding or estimated payments so you're not caught off guard next year. Small adjustments can prevent a big problem later.
This is also a great time to get organized early. Set up a simple digital system for this year's tax documents and start tracking deductible expenses as you go, because there may be some things that you qualify for. This will make tax season easier and helps you avoid missed opportunities.
And if you are getting a refund, think intentionally about how to use it. Instead of treating it like a bonus, consider putting it to work. Build your emergency fund, reduce high-interest debt, or fund short-term goals.
Tax planning is really about reducing surprises and staying intentional throughout the year. When you know where you stand, you can make better decisions with confidence instead of just reacting under pressure.
And once you've taken care of taxes, the next step is making sure all that progress is protected. Because even the best financial plan can be thrown off by one unexpected event. That's where insurance comes in.
And insurance is really easy to ignore when everything is going well. But one unexpected event can derail even the strongest financial plan. So spring is a great time to review your home and auto coverage, your deductibles, and your liability limits to make sure they still match your life today.
This is a great time also to shop rates and ask questions. Policy change, discounts change, and your needs change, especially if you've moved, bought a new car, added drivers, or made major home improvements.
And I just want to point out, you will soon learn what it means to add new drivers.
Not soon.
Well, we'll see what you think about that. One type of coverage people often overlook is umbrella insurance. And despite the name, it's pretty simple. It provides extra liability protection on top of your home and auto policies. This is so that if something happens, you're a little bit more protected from other, lawsuits, things like that.
If you're ever involved in a serious accident or lawsuit and the costs go beyond your standard coverage, umbrella insurance helps cover the difference. And it's usually much more affordable than people expect.
And it isn't about expecting the worst. It's about protecting what you've worked so hard to build and giving yourself peace of mind if something unexpected happens.
We also need to touch on life and disability insurance because these are two areas that directly protect your family's lifestyle, not just your assets.
Life insurance isn't about just replacing your income if something were to happen to you. It helps make sure your spouse can pay the bills, your kids can stay in their routines, and long-term goals like education or retirement don't fall apart during an already difficult time.
Disability insurance is just as important, and it's often overlooked. The reality is you're much more likely to be unable to work due to illness or injury than to die early, and disability coverage helps replace a portion of your income if that happens.
This is a good time to review how much coverage you have, what top policies you own, and whether they still fit your life today, especially after things like a new job, a growing family, or changes in income.
And don't forget to update your beneficiaries. These details matter more than people realize, and keeping them current is one of the simplest ways to protect the people you care about, especially if you're not married and yet to have children. If your beneficiaries still reflect your wishes, prior to children and being a relationship, they might not receive the help you intended.
Insurance isn't about expecting something bad to happen. It's about making sure one surprise doesn't undo years of smart decisions. But there's another area that can quietly undo progress if it's overlooked.
That's your credit and personal security. Because even if your finances are well insured, things like identity theft, fraud, or errors on your credit report can create stress, long time, and real financial damage if you're not paying attention.
A good place to start is to your credit reports. So pull all three from all the bureaus and review them for errors and dispute anything that doesn't belong to you. Mistakes happen more often than people realize, and fixing them early can save you time and money and stress later.
This is a really important point. If you're not planning to apply for credit soon, consider freezing your credit. It's one of the simplest ways to prevent fraud and unauthorized accounts from being opened in your name.
And I know we talked about this last month, I think, but digital security matters too. Update passwords, enable multi-factor authentication on financial accounts, and be cautious where your personal information lives online. These small steps dramatically reduce your risk.
Protecting your identity and credit isn't about being paranoid. It's about being proactive. A little attention now can prevent months of frustration down the road. If you missed it, check out earlier podcasts on this very topic that has even more in-depth ways to protect yourself.
When your credit is clean and your personal information is secure, you're not just protecting today, you're setting yourself up for the future.
And that brings us to long-term planning, because once the day-to-day details are handled, it's important to step back and make sure your plans, beneficiaries, and documents reflect the life you're actually living now, not the one that you had 5 or 10 years ago.
A great place to start is reviewing your estate documents, wills, powers of attorney, healthcare directives, and guardianship instructions if you have children. These documents don't need constant updates, but they do need to stay current as your life changes.
This is also the time to double-check beneficiaries on retirement accounts, life insurance, and bank accounts. These designations often matter more than what's written in a will, and they're easy to overlook after a job change, marriage, divorce, or a new addition to your family.
Organization matters too. Make sure important documents are stored securely and that a trusted person knows how to access them if they're needed. The goal is clarity and simplicity, not complexity. And don't forget about passwords, because people are going to need to get into your passwords so they can access some of the accounts.
And long-term planning isn't about predicting every outcome. It's about putting thoughtful guardrails in place so that people you care about are protected, no matter what the future holds.
And if all of this feels like a lot, here's the good news. You don't have to do everything at once. You can make meaningful progress with just a 2-hour sprint.
Think of this as focus time, not perfection. Set a timer, grab your laptop or phone, and knock out one step at a time. Even small updates can create big momentum.
So start with 20 minutes to cancel or renegotiate subscriptions and set bills to autopay. This is one of the fastest ways to free up cash flow and reduce stress.
Next, spend 20 minutes increasing retirement contributions by just 1 or 2% and setting up an automatic transfer to your emergency fund. Small changes here compound over time.
Then take 20 minutes to pull your credit reports, freeze or lock your credit if appropriate, and then enable multi-factor authentication on all your financial accounts. These steps go a long way towards protecting what you've built.
Use the next 20 minutes to review insurance coverage amounts and update beneficiaries. These details are easy to overlook, but incredibly important to your family.
After that, spend 20 minutes rebalancing your investments and flagging any high-fee funds you want to replace later. This is about alignment, not market timing. I want to say that again. It's about making sure it's with your intended investment goals.
And finally, use the last 20 minutes to list irregular expenses, things like car repairs, insurance premiums, or holidays, and create simple sinking funds so that those costs don't turn into surprises.
So as you can see, you don't need to do this perfectly. You just need to start. 2 focused hours can set you up for a smoother, more confident financial year.
Remember, spring cleaning your financial life doesn't have to be overwhelming. Just break into the steps and use small updates. These small updates can lead to big improvements over time. Thanks for joining us today. If you want more tips or resources, visit forumcu.com.
And don't forget to tune in next time for more ways to make your money work smarter for you. Thank you for joining us today. Our hope is that we can help you live your best financial life. For more insights, be sure to subscribe to the Smarter Money Life YouTube channel and also catch the Smarter Money Minute segment every Thursday on Fox 59's Indie Now Lifestyle Show. Remember, Reaching your financial dreams is a journey, and every step you take brings you closer to making your dreams a reality.